Welcome to this video. Which is all about Forex trader lifestyle. Now, in terms of what we're going to be looking at today, we're just going to be looking at putting in a daily routine for profit and learning from how the great traders plan their trading day as well. Okay. Now, in terms of doing this, what I'm going to do is give you 10 basic rules or guidelines, which if you use them, with just a simple strategy, they can help lead you to success. Now, the rules I'm going to give you, I've learned from studying, all the great traders. Now, they're all going to trade in a slightly different way. They're all going to share certain characteristics in common. The rules, they're soundly based. They will help you win at Forex trading. We'll go through them in a moment, but just want to go through a couple of misconceptions about professional Forex traders that the majority of the public have, which is they work hard. They don't work hard at all, okay? They have a trading strategy, they're confident in its edge, they just execute it within daily routine. It's effortless. Also, the other misconception about professional Forex traders is they spend a lot of time looking at price action on a screen. That is not true either. They don't. They've normally got their orders set in advance. So they don't just react to price action on a screen. They've already planned what they're going to do. Now, in terms of the daily routine I'm going to outline, it probably takes about an hour a day. And that's it, okay? One of the peculiar things about Forex trading is if you work too hard, okay, it's counterproductive in terms of the profits you're going to make. In fact, it will actually cause you to lose money, which will become clear as I go through the rules. So let's just have a look at these 10 rules, and I'll be back to discuss them in a bit more detail. Okay, here are 10 points I consider important in a daily routine. Now, in terms of the best time of day to do your analysis and trading signals, for me, it's after the London Open. That's only because it fits in around my lifestyle. I think if you're setting a time of day to do your analysis, just let it fit in around your lifestyle so you can be consistent with it. And the reason you can do this is you can set your levels in advance, or you should set your levels in advance. Looking at the charts objectively, once they're doing your analysis, you then put your trading signals in the market or your open orders, and then you can update them each day. Now, there are people who maintain that there are best times to trade the Forex markets each day. I've seen a lot of people say, for example, the London close, or other traders say, if you sit around at the screen all day, you can respond to price action as it unfolds. That is a huge mistake in my view. You'll suffer from recency bias if you spend too much time in front of a screen. That is the natural tendency of humans to weight more recent data more strongly than past data or longer term data. So what you're doing when you're looking at a screen, you're seeing the really short term price moves, minutes or hours, and naturally you're going to weight it as important when you look at it. It looks orderly, it looks tradable, it's actually noise, okay? What you can end up doing is taking low probability trades, making impulsive trades. It's just emotional trading in a low probability time frame. It's the bigger levels in Forex that are important. Now, I've often said in my other videos that obviously day trading and scalping is a total waste of time. But recency bias also hits traders who set levels in advance. I've seen it very often where a trader makes a very objective trade. Then, let's say there's an important news event coming up in relation to his trade. You want to sit there and watch the price action. Let's say he's making money in a trade, and then suddenly, prices reverse quickly in 5 or 15 minutes or whatever. Snatch the trade out, okay, or take it out because he sees the price going against him in the short term. But if you were to be thinking objectively, the levels he set were valid before. So, even if you've set a trade totally objectively, if you come and look at price action too much, it can basically put you off what you originally did. It just brings your emotions more into play. Now, in terms of what have we got next? Do analysis quickly. Never spend too much time looking at a chart, deciding what to do with it. A couple of seconds is normally enough. If you don't see anything instantly, you should just move to the next chart. If you overanalyze the chart or overthink it, when you put it in the market, you're not going to be as confident in that trade because it didn't come to you quickly, you've obviously got some doubts that you had to think about it. And also it might be subconsciously you just want to find a trade, i.e. you want to get a trade in the market. So it either comes to you quickly or not at all, so do it fast. Time to look at price action. I said, obviously earlier, shouldn't look at it too often at all. I would say that for me, I look in the morning, obviously when I'm doing my analysis, and then I look at the New York close. In terms of the New York close, obviously it's the end of the trading day. Sometimes I might do a market on close order. I do almost all my levels in advance, but sometimes a market on close order I might add in. Also, I like to look at the close on a Friday in particular to see whether I should trade over the weekend or slim back my positions. Now, in terms of best pairs to monitor, there is no best pairs to monitor in my view. You're looking at the chart setup, not the name of the pair. I think you should do a good variety of pairs. 10 to 20 at least. I do personally 30. You're really trying to get high probability setups. The more pairs you look at, the more high probability setups you're going to get. And as I said earlier, analysis should be very quickly, so it doesn't take a lot more time to analyze 20 pairs than let's say 5. If you've got a lot of pairs, you're going to get a lot of opportunities. Now, in terms of coming to trade pairs, even though I look at a lot of pairs, I don't want too many trades open in the market. I only want the ones that are really high probability in my view. And I normally restrict trades I've got open to 4. Okay, you find a lot of trades correlate, so you may as well pick the best one. Okay, there's no merit in diversifying in Forex. A lot of traders think more pairs they've got on, less risk they've got on. Okay, I don't believe that is so at all. Diversification is a waste of time, doesn't reduce risk, just simply will dilute your profit potential. Each day I will look at whether I need to vary my risk exposure or trade size. And when I say that, I mean that, let's say I'm losing in the market, for example, on new trades coming in, I might decide to cut back the size of trades going in, to come off the drawdown. If I've had a good run in the markets and I suddenly see a really good trade, I might decide to put my bet size up a bit. Okay, so I like to vary my bet size. And I think in a probability-based market, it's been proved time and time again, variation of bet size will increase profit potential, decrease drawdown. So always look at the risk exposure and trade size each day. Also, I want to know each day, what is my total risk if my stop is hit on all trades? Work that out every day. I always think it's important. A lot of traders don't, really, dwell on this point that, all your trades can get hit. They will get hit at some point. So the total loss should be something that you're comfortable with, and you'll put your trade account too far behind. Personally, as a rule of thumb, I don't like to lose more than 10% of my equity if all my trades are hit on stop. Number 9, money is working capital, make it work hard. Each day I'll look at trades open in the market and decide if I should keep them open. Let's say the trade is not really doing much, it hasn't made the move I thought. I'll very often take it out, even if I'm at a loss, and put it into another trading opportunity. Okay. Money's working capital. Normally you're going to find that most of the trades you do, if they're going to go right, they're going to go right quickly. That's what I've found anyway. So I like to have my money working. Got no problem taking a small loss in a trade and moving to another trade. Maintaining a focused mindset. On a daily basis, I do have some, I have my rules, I have some quotes near me which I always look at, but I also like to read something each week. I don't do it every day, but stories about great traders, or a book on psychology. We're really trying to keep our mindset focused, clear, and also improve ourselves and stay motivated. So I always do a little bit of reading each week on psychology or trading books, depending. Right, that's my 10-point summary. I've got a few other points to discuss, which we'll go through now. I'll come back after that short summary of 10 rules to use in your daily routine to help lead you to success. I think, in terms of those rules, they will focus you on the best trading opportunities at all times. You'll have good money management in there as well, and you will basically not have to spend a lot of time on your trading. Now, those rules themselves, I've taken from some of the great traders of all time, like Warren Buffett, Jim Rogers, George Soros, Paul Tudor Jones. So it is a framework that will work. If you've got a simple strategy you believe in, use those rules, they will keep you on course. Now, in terms of point number 10, where I said about reading up, something on psychology each week or on trading, I normally read books on the great traders. That may be personal to me, but I use that to keep mental focus and not deviate from my rules. I think your emotions are always boring from within, and a lot of traders are tempted to deviate away from their rules. I mean, you think about Forex trading, it is boring most of the time, it is frustrating most of the time. Then you have short periods when you're making a lot of money and you feel quite euphoric. It's at those times you can lose focus. Like if you're making too much money, or not too much money, if you're making a lot of money in the markets, you might suddenly decide to overexpose your account in terms of risk. Or if you're losing, get frustrated, you might just decide to take a strategy outside of your rules. And I think, for me, keeps me on course and keeps me focused. And I have over the years seen many traders adhere to their rules for years on end, and then suddenly they just decide to deviate from them, and then they end up losing their money. So in terms of the video, that's it for today. I think a simple strategy and that routine and those rules, you can achieve trading success with just a simple strategy, soundly based, and you believe in. So that is the video for today. Thank you for watching me as usual. Take care. Have a good day.